Palantir, the company that develops software and data analytics tools for the defense industry and large corporations, just reported its first quarterly earnings announcement since going public in September. PLTR came into the report in the $15 range, and the stock bounced around in after-hours trading following the report. It fell more than 8% before bouncing back again. The day after, on Friday the 13th, Palantir stock moved up 8% higher to $15.80. In this Q3 recap video, I'll highlight key numbers from the earnings report and slide deck, play clips from analyst reactions, and give my own analysis on where this stock goes from here and towards the end of the year. Let's start with the slide deck from Palantir's Q3 report. Palantir has some opening slides here congratulating 3 of its partners for positive developments that came from Palantir's platforms. With Palantir Gotham, they write, the U.S. Justice Department settled with Purdue Pharma to fight against the opioid epidemic in America. With Palantir Foundry, the World Food Program won its recent Nobel Peace Prize. And with help from Palantir, the U.S. Special Operations rescued an American hostage in Nigeria. Now, obviously, there is no way of knowing if Palantir directly contributed to each of these incredible accomplishments that happened during the third quarter. But they do, however, show Palantir's confidence in their partnerships with some of the biggest names. Financial report. In the report, Palantir specifically mentioned how their operating results continue to show significant improvements. In the third quarter of 2020, they generated revenue of $289.4 million, up 52% year over year, and that is approximately $9 million above the high end of their prior guidance range. Also, they incurred a loss from operations of $847.8 million, which includes $847 million in stock-based compensation following the recent direct listing. And this has been a point of contention from what I've seen so far. I saw quite a few people questioning this in the live chat that I held for the conference call. By the way, if you want to watch that, you can replay the whole event with a link in the description. I highly recommend doing so for anyone that did not join the thousands of us that listened live. Anyway, the point being that 99.9% of the operating loss came from stock-based compensation. I'm not an expert on how direct listings impact that part of a company's financials, so I'll defer to anyone who can give me a little more clarity on that. But I would presume that the major loss here is as a result of that one-time occurrence and will no longer be an issue. Importantly, income from operations was $73.1 million when adjusting for those $847 million in stock compensation, $20.2 million in related employer payroll taxes, and $53.7 million in expenses related to the direct listing. Again, mostly one-time costs. I'm not sure if the related employer payroll taxes is a one-time thing or not. It doesn't really sound like it, but Palantir is demonstrating that without those operating costs, they were actually up to an income of operations of $73.1 million. Palantir stated that the demand for their software from customers in both the commercial and governmental sectors has continued to increase throughout the year. The current economic climate has forced institutions to transform quickly in order to survive, and Palantir is helping those customers do more with less and has been at the forefront of helping with responding to the pandemic. They go on to share a handful of examples of this. In the interest of respecting your time, I will spare from reading these. Link in the description if you're interested. What I will show is a few screenshots they've included of their software platform. I've gotten many comments saying that some of you don't understand the product, the service that Palantir provides to its many customers. In my opinion, it's a good aesthetic with a focus on productivity and solving the problems that need to be solved. There's not too much to be gleaned here, but it is nice to get a look at the interface that all of Palantir's clients see. Here's some more slides. These are focused on revenue. Just to reiterate, revenue increased by 52% year over year for this quarter, that is Q3. And that's impressive growth, a growth rate that us shareholders would very much like to continue. Growth whilst maintaining strong financials will be a big focus, for me at least, for this company going forward. They could sacrifice one or the other, but I want to see both continue to improve. Palantir's existing contracts are continually increasing as their customers are obtaining value from their software subscription. This is a great sign. As long as those customers are happy with the service they are paying for, then they will continue to pay for it. This is the software as a service model. Investors tend to love companies that have service business models since that revenue is always recurring and does not just come from a one-time purchase. Here's Netflix compared to Palantir by revenue. Just look at Netflix's compounding growth. You'll see Netflix pulling in billions upon billions of dollars. If Palantir can take this kind of trajectory for years to come, that will catapult them to a high valuation. Again, it's all about growth. Speaking of which, Palantir's commercial business grew 35% year over year as they signed the largest commercial deal in their history, a $300 million license renewal in the aerospace industry starting in 2021. They also signed a few new deals across a variety of sectors, including consumer goods, healthcare, and financial services. The government business, on the other hand, grew 68% year over year, with a 2-year, $91 million contract with the U.S. Army Research Laboratory and a $36 million IDIQ award with the National Center for Advancing Translational Sciences. That means revenue from government clients increased to 56% of total revenue from 54% in the first half of the year. I would like to see commercial revenue start to eat into that government segment, not because government contracts are not increasing, but rather because companies see the use in a platform as good as Palantir claims to have it. Overall, they accelerated growth in all 3 phases of their business model, as you can see, and they foresee their contracts lasting longer, up to a duration of 3.6 years. To cap it all off, as of September 30th, 2020, Palantir has $1.8 billion of cash and cash equivalents on their balance sheet. A very strong place to be, in my opinion. Guidance. With strong visibility into future revenue and the continued acceleration of their business, Palantir says that they are raising their full year 2020 revenue and operating income guidance. They were expecting 31% revenue growth in Q4 2020 and year-over-year revenue growth to be greater than 30% through 2021. So I personally hope they can beat that 30% target. I would like to see growth increase, not just stagnate, but 30% would nonetheless be a great place to be, and maybe they're just being a little conservative here. Again, I would be totally happy with 30%, but it would be awesome to see them above that. Here's how one analyst responded to all of these numbers and the report as a whole.
First ever quarter, not a hugely populated consensus to compare the numbers to. On the surface, they don't look too bad.
No, not at all. They beat the top line, modest raise going forward. And I think the biggest concern was really just the 40 to 50% move in the last 2 weeks. You had a pretty sharp rise in the stock given the change out on the government potential. And I think there was some concern, would this hold up in a Biden administration? So there was a little bit of a hangover on the government side, but they posted their largest commercial win ever, $300 million transaction. Average customer size is going up. And again, the guidance for 1 quarter out looks good. I think the biggest challenge for investors on this stock is really just the lack of disclosure. And we didn't get a lot of color about how next year's shaping up. But overall, good results, just a big move into the print. What investors want to see them is broaden their wings and go from landing elephants to landing antelopes. And so can Palantir broaden out from winning these large mega contracts at $300 million? And again, I think we go back to the big argument from investors. They just like to see that broaden. They today have over 125 customers, and they claim no one else has what they have. And ultimately, the goal is to get to thousands of companies, thousands of government entities where you can broaden the reach and not be dependent on landing these big contract wins.
Diversification and revenue base. Top 20 customers, they say, represent 61% of total revenue through the first 9 months of 2020. Last year, that was about 68%. So it does appear to be moving in the right direction. Have they convinced the street?
Not yet. I mean, this is the first quarter out of the gate. I think it's going to take time. We ultimately believe that they can broaden that reach. The primary focus of this company, and they've said this, is we provide software that no one else can provide. We solve the world's most complex problems. And the bear scenario right now is that not every government or commercial company needs this level of commitment or size of contract. Can you achieve this mission with other software companies that we cover? It's not going to happen overnight. I think the stock went up based on the shorts were basically riding a Biden administration would be negative given the Peter Thiel Trump connection. That came unraveled. The long onlys came in, and the shorts covered, and you saw a big rise in the stock, is simply what we think happened from our perspective on our desk. What we think going forward is it doesn't matter who is running the country. This software is helping track terrorists. And so we don't believe that it's really going to have any kind of impact as it relates to who's running the country. The government will continue to buy packaged software and not build solutions. And we think Palantir sits very nicely in that mix. Now, the country still needs Palantir to help protect, help do COVID tracing, and a number of advanced features that they can do with their software.
He says they need more transparency. Well, let's talk about it. In Q3, Palantir closed 15 deals, each worth $5 million or more in total contract value, according to the report. So what is there to be concerned about with all of this? Well, for starters, the net loss of $853.3 million being significantly higher than the loss of $139.9 million in the quarter prior. Assuming Palantir doesn't plan to make stock compensation its biggest expense each and every quarter, and the core business continues to improve, then that should not be a problem. On an adjusted basis, earnings rose to 9 cents per share, beating the consensus forecast of 7 cents per share. Now, where is the stock going from here after a fairly strong earnings report? I know many of us were hoping the stock would explode following the announcement, but the fact is the stock had such a rally in the past few weeks that was pretty unrealistic to expect. In terms of where we go from here, I think we need to wait for analyst notes and potential upgrades now that the report has been released and they've had some time to get a sense of what really happened this quarter. I expect the stock to settle down without any real news to trade on over the next few weeks. Sure, we could see some serious movement, but I think we'll get a good sense of the base for this stock shortly, and maybe we'll trade into the macro news if there is any. I look at it at $15 and I love it below that level. This is a strong company in the making. Profitability and growth need to be big focuses going forward. Hopefully we can get some clarity on both of those targets not too long from now. I threw some quick estimates for Q4 together with $300 million in revenue, being that aforementioned 31% quarter-over-quarter growth, and then we got gross profit yielding a nice $190 million, and operating income of negative $155 million. Those numbers could be way off. That is just what I am forecasting at this point, just a few days after the call. The revenue target is probably on point since Palantir themselves are guiding for it, but I will most likely be off on gross profit and operating income. I'll update these numbers as we get closer to the Q4 report a few months from now. I put these estimates together using hypercharts. You can find the link in the description. And I'll also provide you with a referral link that you can use for the premium subscription for a lot of useful financial features. It's really a great service, and I use it for all of my investing research. This is not a sponsor or anything, I'm just sharing it with you. If you get signed up, you can add a forecast to the community forecast section on this company's page. I think it would be really great to get a lot of people to make estimates in this section and we could see who's closest. For Q4, I'll feature the subscribers with the most accurate estimates for revenue, for gross profit, and for operating income. That should be fun. For now, I'm going to set a price target of $18 for the end of the year with a bull case target of $20. And don't take these as actual analyst price targets. This is just what I'm thinking, it's my opinion, and we'll have to wait and see if we do get any analysts to change their price targets. I hope this Palantir Q3 earnings recap was of value to you. All important links are in the description. Are you happy with PLTR's Q3? Are you surprised with the stock's reaction? What do you think about the movement in PLTR? Now hit like, subscribe if you're new, and I'll catch you in the next video. Until then, peace.